Oil searching for direction right now after diving to the lowest level in 6.5 years last week. The recent price plunge keeping investors on edge, and current volatility proving just as hostile. What is triggering these wild swings? Joining us right now to talk about the energy markets is John Hofmeister. He's the former president of Shell. John, good to see you again. Welcome back.
Thank you.
John, I want to begin really with what's going on in the oil markets in terms of the price and the impact, because we've been talking about this, and I find that this is going to be a real worrisome trend for the broader economy, because you've got a lot of shale companies, oil companies that are highly leveraged, and as prices go down, are we going to see bankruptcies? Are we going to see this mean they're going to have to redo their credit lines? And does that mean that this is going to have a real negative impact on the broad landscape here? What do you think?
I think there's going to be a lot of negative planning for next year. It starts in September, October in the industry here in Houston. We'll see a lot of companies cutting back their expectations for next year if we continue to see these lower oil prices. And the consequence of that is, yes, I believe there will be an increase in bankruptcies. There will be an increase in companies merging together. There's been a lot of value destruction, Maria, over the last 8-9 months in this industry. And when I mean value destruction, I mean people have just cut costs dramatically. And when they set down a drill set, there's a lot of damage to the tools. A lot of things get lost. There's been cannibalization of parts. Anything you can do to not spend money is what the industry has been doing, many of them, during this period. So when you come back from that, you've got to eat all that cost somehow. And you've still got to find the money to come back. So we're in for a rough time in the fourth quarter, the first, second quarter of next year, until we see some kind of signal, some kind of trend that says there's an upward swing on the oil price. It's the only way to come back.
Wow. So are you worried that that impacts the broad economy?
Yes, I am. You know, 200,000 people have lost their jobs in this industry. Imagine if Detroit announced 200,000 job losses. You'd have everybody from the White House to the Congress. You'd have everybody saying, what's going on in the auto industry? How can we help them? Well, 200,000 real people are out of work in the oil and gas industry. Not a word. The industry is doing the best it can under the circumstances, but until we see an increase in the price levels, it's not a good outlook for the economy as well as for the industry itself.
John, we talk about the industry, we talk about the companies that have borrowed, but what about the impact to the lenders, like the financial sector, for example? What kind of risk lies in there as the companies that have lent these guys the money and may not get paid back?
Well, these are pretty smart people, and I think the Texas banks and the comeback from 2008, 2009, I don't think we may see bad loans, we may see write-offs, but I haven't seen any signals from any banks that they're in real trouble or they're overly worried. Now, it may be that they have liens against equipment. That equipment may be valueless. So it remains to be seen if there is serious damage to the financial industry. But right now, I don't hear anyone talking about it.
But, John, you're talking about the need for higher oil prices. But as a broad economy, lower oil prices benefit the broad United States. It benefits the individual and any business that's a big consumer of fuel.
You're absolutely right. And so what the industry cares about is what's the sweet spot where the consumer feels a fair price, an affordable price, and the industry feels a price that returns on investment. I think we have to keep in mind that a lot of the economic growth in this country, 2011, 12, 13, 14 even, came from the massive spending that was taking place in the oil and gas industry. Nobody has really recognized publicly that a lot of the growth, even though it was 1.5%, 2% anemic growth, what would the economy have been doing were it not for the investments in the oil industry?
No, we definitely have
recognized that on this program.
Absolutely. And Richard Fisher, when he was the president of the Dallas Federal Reserve, told us a year and a half ago that much of the jobs created in the last several years from 2007 have been around energy. And I'm talking not just talking about shale projects, but manufacturing. A lot of, sort of secondary industries that are attached to the oil business.
You're exactly right. And I think that was at higher oil prices. So we had economic growth with heavy investment. And so I'm not too worried if we get back to $60, $70, $80 a barrel. I don't think that is going to crash the economy because we had higher prices while the economy was growing. But we can't survive, we can't continue and see the kind of economic growth you would think from the reduction in the oil price, because it has such impact on capital spending overall.
Wow, 60,
I'm
70.
worried about 2000.
Yeah, go ahead. Tell me, John, what are you worried about?
I'm worried about 2016, 17, and 18 because of the drop in capital spending and what that will do to the oil price when demand actually exceeds supply.
But you're talking about 70, you're talking about 60, 70, $80 a barrel oil. We're at 46. You think it's going back to 60, 70, 80 soon?
Probably sometime next year. I don't know the exact date.
Right, of course.
But I think we're bottoming out. We're bottoming out now. But we're going to be down 500,000 barrels a day of production in the U.S. I frankly think that the Saudis will let their production attrite. They'll let it go down because they're spending an awful lot of money to maintain the status quo. And if production was down 1 million barrels a day and the U.S. was down 500,000 barrels a day, there goes the surplus. We're back to equilibrium. And that, I think, is in the 60 to 80 range.
All right. We will leave it there. John, great to have your insights. We so appreciate your time today.
Thank you.
Thank you, John. John Hofmeister joining us there, former president at Shell.